Hey, how's it going, everybody? Tony here. Hope you're doing well. Today, I wanted to go through my entry model here for wave threes and Cs. I believe it to be the most powerful entry model you can have with Elliott Wave, and we'll go over why in a minute here. I thought it'd be hilarious to come up with an acronym for this model. So, right now, I'm calling it the I'm set model. And we'll go through each of these steps here and do a little description on what I'm looking for when a trade is setting up and when I see certain things display themselves within the market, how I try and take advantage of those moves and that clarity. So we're going to go over this in a little bit. With that being said, I'm not going to go too deep into the educational portion of Elliott Wave. If you're looking for entry models at this point, I suspect you have at least a little bit of knowledge on Elliott Wave. If not, and you want to learn more about technical analysis and Elliott Wave as a whole, I would definitely recommend going and checking out TradeDevils.com here. We do have a sale going on, depending on when you see this video. But we do have a free course here that you can take advantage of. Take a look around, see if you like the information and the way it's being conveyed. If you do, you can move on to the Blue Belt where we start deep diving into Elliott Wave and the Elliott Wave theory, as well as other technical analysis practices, not just Elliott Wave. So if you want to learn more about technical analysis to include Elliott Wave, definitely come check out the site and learn more. First question we have to ask ourselves is, why do we care about entering in on wave threes or Cs or both? Well, in Elliott Wave, the third wave of an impulse is going to be the most powerful move where traders are going to get the most gains and the most gains the quickest. So there's an advantage of getting into this pattern nice and early to ride that move up and getting out within the meat of the move, essentially. When it comes to the wave Cs are attached to zigzags, which happen to be the most common pattern within the Elliott wave lexicon. So the commonality of the zigzag and the wave C makes it profitable that way, where you can take advantage of this when you see it in the markets. And the wave three is advantageous because it's the quickest, farthest move or the meat of the move within an impulsive wave. So those are the two reasons we're looking to enter in on this model. If we take a look down here, you can see already that they both have similar beginnings or origins. After that, we have certain ways that we can kind of track and see what's going on within the pattern as it progresses. But everything to the left here is going to be similar. And that's why it's called the 3C model, because they both have similar origins and entry points, regardless of what's going to come afterwards. So even if you have no idea what is to the left here, or it's kind of garbage and unclear, just as long as you have these steps, a motive move out of an AOI or a motive wave move up and an internal retracement to that motive wave, you can enter and take advantage of a potentially profitable trade just based on possibility of it either being a zigzag, again, which happens to be the most common pattern within the market and within Elliott Wave, or a potential wave three. At this point, you don't really have an idea. If you think everything back here is unclear, there is a potential for this to be a wave three, and you could take advantage and ride it up. You don't have to know or suspect a wave three is coming. You just have to look for this nice, clear setup, take an entry, and then you can take steps to at least be in a profitable trade, if not be in the swiftest move you can find in Elliott Wave. So that's what makes this such a powerful entry model. Either you have a potential of riding the wave three up, or worst case, potentially you're going to be in a wave C here, which gives you at least some most likely targets that you can take advantage of to profit of and be in a profitable trade. So now we know the why of this entry model. Let's go through what we're looking for within this entry model. Just to start off, as you can see here, they're not numbered at all. They just have little check boxes next to them. So depending on where you find the price action on the chart is going to be where you kind of start this checklist. You can always go back in hindsight and verify that this move came out of an area of interest, let's say, but depending on where you find this price action is where you're going to start using this model. With that being said, let's go ahead and start with I, identify and define your zone. What this means is that you're going to be looking for an area of interest on the chart, whether that be some kind of a level of interest, a golden zone, some geometry, an EMA, high, low, doesn't really matter. You're looking for some kind of AOI or LOI on the chart where you suspect a pivot may occur. Ideally, you want to look for confluence of many methods. That would be an ideal. Find a nice little box of confluence and look to that for a potential change in direction or change in trend or a pivot within the market. The next step within this trading model is going to be M, motive, confirm the move. So what you're basically looking for is a move out of this AOI to confirm that, okay, we have some confluences, we have some interest here, we have some buying or selling, depending on which way you're looking. Now we want to confirm that this is a strong move, at least to the degree that we're looking for. So in this case, we're looking for a swift move out and a retrace back in. A break of structure is ideal in Elliott Wave because what you're looking for here is if you have an impulsive move down and a break of the wave 4, you know at least this portion of the impulse is complete. If you don't wait for a break of structure and it's not necessary to take advantage of this model, it's ideal that you get a break of structure because at this point you could have a 1, 2, 1, 2, 3, and you wouldn't be able to enter in or you'd get stopped out right away with this. So looking for a break of structure lets you know that, okay, if this is an impulsive move down, you at least have a break of that, and you know that this impulsive move is complete, and that you're at least looking for a potential of a deeper retracement, depending on how this bounces out. So that's why a break of structure is kind of the key to this whole thing. It adds a lot more confluence and confidence into this model. And that's why it's such a big part of this model is break of structures as we go, because it confirms that the prior move is complete at whatever degree you're considering. So now going over the break of structure, we're looking for a nice motive impulsive move out. We want to identify this. We want to make sure it's as clear as possible. And that's another reason this model is so powerful is because we're looking for clarity out of this. If this comes up, bounces with some junk PA, that's up to you to consider it. But you do need clarity as part of this model. We're looking for a motive move out of an AOI. And that's what the M stands for in I'm set entry model here. Next step on our entry model here is going to be scout, anticipate the pullback. We're going to scout an AOI after the motive wave completes or track as it's completing. We're going to set up a provisional trade plan as if the price will return to an AOI. The final furthest extreme stop you can put is at the base of this impulse or motive move up. So that's baked into this. If we break this structure, then we either counted this wrong, the market wasn't with us that day, something's going wrong, and we want to get out of that trade and wait for another setup. Again, we can find other confluences such as the golden zone, algos. If we look to the left, we can look for some other levels or other supply demand, EMA, what have you, to kind of hide our stop behind. But for this model, the furthest extreme is going to be the invalidation of the impulse. For targets, we have different reasons for taking targets at different points. Depending on if this is a C wave or a 3 wave, again, we don't really care. Taking profits can be a bit tricky for some people. Again, I'm not going to go through all the different strats. You can take 20% here, you can take 30% there, take 100% here. It's really up to you and your strat and what you can live with as far as taking profits go. But these are the areas I think you should look for when you're expecting a C or 3 setup. Depending on how this stuff moves, you can micromanage it if you want, but these are just the baked in ones that you're going to want to consider when you want to take profits. We're going to go through all this before we even know that this is going to retrace. We're doing all the thinking and logical steps here before prices even coming near our AOI. We want to set this whole thing up so that when the time comes, it's just a matter of executing and being done with it. So going over these right away, first place you really want to take profit, in my opinion, is going to be your first trouble area. And that all depends on what's to the left. Okay, so if you have something to the left, if there's a big level here, you have an EMA that's coming up, anything like that, anything that could possibly make the market want to pivot and come back on your entry. Now, for that, in Elliott Wave, the first one's going to be this pivot here, because we do have a ABC down, let's say, in this situation. This could only be the first primary actionary wave of the correction. This could be some kind of B coming up here for a flat, and then we moved back down, and your entry would be in danger. So depending on where you put your stop, if you put your stop at the extreme low, you don't really care what happens in here. Just as long as it doesn't come back down to the base of this impulse or motive move, it can do all kinds of crazy stuff in here before it takes you out. But if you end up taking an earlier entry, and this comes up as a potential zigzag, your entry could be at risk of being taken out depending on where you put it and depending on what pattern prints. That's going to be your first take profit area. You can also use other strats where you take profit here and then you can move your stop further away and then give yourself some more room depending on what you think is going on. But that's a whole different video. Right now, again, this stuff is just kind of baked in as an area of profit taking for this model. The next spot we're going to look at to kind of bake into this entry model is the most likely target for a zigzag. So again, depending on how you suspect this pattern to play out or what you think this pattern is before you enter it, this is another spot where you can consider taking profit no matter what. Because for one, it's the most likely target of a zigzag. So if this is a zigzag, You at least have the profit, you're out, you're good to go. The 1-to-1 of the wave A here is a good spot to look, as well as coinciding with the base channel here. These are two most likely targets of a zigzag to take advantage of, and you want to scout this out ahead of time and potentially see if there's anything else in the way to the left. Again, if there's any other troubled areas, a level, some fibs, another golden zone, something to the left. If something's going to hinder the price action from continuing in the way you want it to, you're going to want to take profit at least in that area so you don't have price action come back on your entry. This would be another consideration for a take profit using this model. Final take profit area for this model is going to be the most likely target for the wave 3. Now that's going to be the 1618 of the wave 1 here. So this is going to be 1, 2, and this is going to be 618 of that 1. This is also a target for a zigzag, as well as 272 here. But this is another area of interest that you would want to conservatively consider taking profit. Again, as this progresses, as this pattern progresses, you can adjust things as you want, but that's a little bit more micromanaging and you can build a strat around that. But for this model, these targets are where you want to take at least a little bit of profit or start considering what you have really going on. Base channel is going to be a huge asset here. It's going to help you gauge the strength of the move. If we break out, it's most likely you're in a wave 3. If it stays within and this movement's all choppy, this PA is all choppy, it's less sharp than the wave A, let's say, there's a potential you could be in a wave C where you could start stepping up, how much more you want to take profit, where you want to move your stop loss, all that kind of stuff. Just a baseline for moving up stops. If you enter on down here, as soon as you get a break of there in a wave 4, you can move the stop up there. Again, it's all on how far you think this thing's going to run and how much you want to protect your profits. So again, going back to kind of scouting an entry and then setting up our trade plan, now that we know the most likely targets are the baked in areas that we want to consider a trade, we kind of want to lay out and get a visual of what that might look like beforehand. Because remember, we don't have any of this set up right now. This is all just a black chart and we're on the hard right edge here. So the first thing we want to do is throw fibs on and track the price. So that's what I'm going to do here. I'm going to throw a fib on. If we think the impulse is complete, we can put it right at the top. If it starts moving up and away a little bit more, all we have to do is track it and keep moving that fib up. What I have on here is this fib retracement tool shows us where there's a potential for a retrace depending on our entry model here. With Elliott Wave, we're going to find that 382 again is going to be most likely target for a wave B, and then the 50%. For a wave 2, it's going to be 50% and then the golden zone. So this whole area here is kind of the prime real estate we want to look for this retrace to finish in. So now that I have my fib on this motive wave move up here, I'm going to be watching for the retrace into these zones. And depending on how this retrace finishes or what pattern it is, I'm going to be looking for my targets both for entry and for take profits as it goes. Just to kind of get a visual, I can use this to get a visual on where the wave 3 is going to land. This is where the wave C is going to land with a 1-to-1. And I can use this to look to the left to see what I got going on, to see if there's any other troubled areas or anything that could come into play that would block it from reaching these targets. So just to walk through this, 786 is going to be a deep retrace, and then I'm going to have a corresponding deep retrace for the C, deep retrace for the 3. We're looking for a 1-to-1 for the C, and we're looking for a 1618, most likely target for a 3. And all these correspond with the projections for C and 3. So using this tool, I can put together a trade plan saying, okay, if this comes down, breaks, comes in like a zigzag, and we get a nice deep retracement, I know that I'm going to be looking for this area between the 50 and 618 potentially, and that these are the areas I'm going to be looking for take profit in the C wave, and this is where I'm potentially going to look for taking profit in the 3 wave right away without pulling all those extra fibs. We know what area to look for right away with one tool. Next thing we're going to talk about here is the E. We're going to examine and assess entry conditions. So again, basically where we are in the trade is right here potentially. We've identified a motive wave out of an area of interest. We set up a provisional trade plan. We think it's going to come down in a zigzag form, enter into the golden zone or the algo entry zone, and move up for a potential wave C or wave 3. Everything looks good so far. Now we're going to watch and track as price comes into our AOI, if it does. We're going to set alarms. First alarm I would set is at the break of the 4 potentially, or if you want to keep an eye on it, we're watching for an impulsive move down, a retrace, and then we're looking for a move down past, probably more likely than not. So you can set some alarms here to kind of track this as you go. You don't have to look at it every day. Just set an alarm, let you know to come back and look at the chart to potentially look for a trade entry. If the PA starts coming in and you think you have a potential for some kind of triangle or something shallower, you can always set up the trade plan around that. You already have your provisional one by using that fib tool. You wrote everything down. You have your potential targets all laid out, and then you can go ahead and start making adjustments to that as this comes down. So again, if you think this is going to be a triangle, you're going to have to put that fib tool on or keep that fib tool on and track where it goes and then make your adjustments from there as far as most likely targets. If everything goes good and it starts coming back into your area of interest deeper, you already have the trade plan set up. You're done with that. All you have to do is start looking and considering what you want to do. Do you want to ladder in? Do you want to set limit orders? Do you want to wait for a reaction? That stuff you need to start planning out when it starts coming into your AOI. You're getting close to execution time. You need to start figuring out how you want to execute this trade. And again, this may be something you have set up within your provisional trade as well. If it comes into this AOI in such a fashion, I'm going to put limit orders and try and catch it as it dips into my AOI. A more conservative wave that I've been using, again, using breaks of structure here, is looking for an area of interest, keeping an eye on it, keeping alarms on it, waiting for that initial move out of the area of interest to add confidence that this is an area that the market wants to pivot away from. This gives you a little bit more confidence, like I said, with the break of structure. That means that this potential move down here is complete and that there is something else being printed. The downside, again, with this second entry potential, you could miss the move. If it's a big, strong, powerful three and it just sends it, you're going to miss out potentially. There's always a chance you can catch in on the second retrace here for the wave 1, 2 of the three, and maybe you'll get lucky and get a nice entry to ride this out right away. So the primary portion of this entry model is going to be kind of down here in the AOI, your initial AOI, where you get the start of the move, the potential pivot of the move. This is going to be kind of your second entry, or your more confident entry is the second entry after the price has reacted out of it, come back in, done an internal retracement at the lesser degree into yet another AOI for a potential to continue up and a wave C or 3. Just one more thing to go over here. When we get this retrace, you're really looking for some kind of corrective move, whether that be a flat, triangle, zigzag, whatever. If price just comes down after your impulse, just in a straight move down, that would scare me out. Again, depending on the liquidity, all that kind of stuff, time of day, could consider this just the retrace and take an entry. Or again, you can always wait. There's no need to FOMO in. If it comes down quick, you can always wait for another impulsive move up out of this area of interest that we already have and look for that retrace on the second entry before you get the move up. So again, the PA portion of this, the corrective PA, is another tell that this could possibly be going in your favor. It's another clue. Again, nothing's 100%. That's another thing you want to look for in here is the PA. Is it corrective? Is it nice and slow and grinding and looks like the market wants to continue in the trend that you're looking for? So now that we work through everything else within this entry model, we're going to go look into executing the trade. So again, just to go through everything that we've done so far, the first thing that we've done is identify an area of interest. Again, that depends on where we find the PA. Is the PA coming into an area of interest? Is it leaving an area of interest? Next up is we're going to look for and identify a motive wave coming out of this area of interest. Is it an impulse that we can count nice and clean? Does it break some structure? Is it coming out like a diagonal? What do we have? Is it motive? If it is, we can continue on. Next up, we're going to scout for an AOI based off of the completed motive wave or impulse, and we're going to set up our provisional trade plan here right away. Even though it's not coming into our area, we're going to set everything up ahead of time. So when it comes time to execute, we're not worried about all the emo getting in the way. We're not second guessing. We're not reevaluating. We're taking the time to do it way ahead of time. So that's set and ready to go if it comes into your AOI. It doesn't have to. If it doesn't come into your AOI the way you expect, if it keeps on going, guess what? You have to readjust, cancel that trade plan, move on to the next setup. So now that we've made our plan, the next thing we're going to do is watch how the price action corrects into our AOI if it does. So we're going to track the price action to AOI, set alarms, look for corrective move to have most likely targets into the AOI for more precise entry. So if you have a zigzag coming in, you're going to look for a 1-to-1 of the A, you're going to look for channel, all that kind of good stuff to attempt to find a more precise entry. Again, you're not going to nail the exact pivot every single time. So entering in a bit ahead of time, front running it, all that kind of stuff is a good strat to consider if it's coming into your area. And that's a big reason why I believe in boxes. You put a little box around there. It gives you a little bit of a front run and a little bit of an after run, or spike through to give you a little bit more room on the entry in case that level gets front run. You can adjust the plan as the PA prints. So again, you've already have your plan together. If PA starts coming in as a double zigzag, you're going to have to readjust your plan. If it comes in as a flat or a triangle, you're probably going to have to readjust your plan depending on how you set it up or what you think is going to follow. And then finally, if you want to wait, if you're not sure what you have, if things coming in hot and you're a little bit scared, that's fine. All you have to do is just wait for that second entry as confirmation. And again, a break of structure added on to that is going to be a huge piece of confluence, in my opinion. The next thing we're going to do is trade the plan here, which is probably the easiest thing to do at this point. You already have everything laid out ahead of time. You have price coming into your area of interest. Now you just have to set up and lay out the plan. We already know where the stop is. The stop at the most extreme is going to be down here. So as soon as you enter, or if you can build it in, depending on your exchange, again, your stop's going to be at the extreme low. If you have other influences or the TDU setup, you can move your stop up a little bit closer. But this is the extreme where you want to put that in. Again, that's baked in the furthest extreme you want to get for your stop loss. You're going to enter your take profits. Again, if you can do all this ahead of time within your exchange, that's pretty cool. But you're going to want to lay all this out as soon as you enter the trade, if not before. Then if price sends when you're not watching or something, you have taken profit and you're in a profitable trade. So you have your trade plan set up, everything's good to go. You set it and forget it. And again, if you don't know what's over here, if it's not clear to the left, you can always watch how this pattern develops. Again, we're looking for clues within the PA. If you get a swift move that breaks out of the base channel, there's a potential that you're going to be in a wave 3. You can adjust things as you go if that's in your strat. If things start getting all choppy and look a little lazy, you're potentially in a wave C. So you can adjust your take profits as you go, but these would be the first 3 that I put in right when you implement the trade. So just to go over some of the caveats with this method, again, we're looking for most likely targets. There's nothing that says the price has to go to any of these targets. So that's why looking to the left and noticing your troubled areas is such a huge deal, because if you have a strong level right there, odds are you could potentially bust through and hit your 1-to-1. But if it's strong enough that you have some concerns that you're not going to bust through, you can always take profit at that troubled area. The other caveat, wave 3s are always going to move past the end of the first actionary wave here. Sometimes, rarely, a wave C can truncate, which means it will not pass this area. So again, that could be another reason if you want to be extra cautious here. And if you worry about truncations for some reason, you can always front run these levels. So those are the kind of the 2 caveats, is that, of course, this isn't always going to play out 100% of the time. Wave Cs can truncate. And that, my friends, is the I'm set C3 entry model. Again, just to go through it, the first thing we're going to do is identify an area of interest. Whether that's level, golden zone, geometry, high, low, confluence area is ideal, or a pivot. If you think this is the pivot low and there's a huge move back up of equal or lesser strength, time to consider that that is an area of interest. This pivot can be an area of interest as well. We're going to look for a motive wave out of that area of interest. We have our area of interest here. We're looking for a motive move out, ideally an impulse that gives us a break of structure at some degree or considered degree. We're going to scout or anticipate the pullback, and we're going to plan for that trade. So right when we see or suspect that the motive wave is complete, whether it be a diagonal or impulse, we're throwing on our fib and we're watching and eyeing up zones of interest, areas of interest, to take advantage of a potential correction that could send the price in a continuation trend based off of this initial move here. Again, a break of structure is ideal, not necessary, but we're setting up the trade plan here to get it out of the way, get it set and ready to go while we're thinking logically and not dealing with the emotion of price came into my AOI, what do I do next? Where am I taking profits? You're not cutting corners, you're setting this up, writing this down, putting it on your chart ahead of the time before the trade even comes to you. And that's what you're going to do. You're going to wait for the trade to come to you. It only takes a couple minutes to go through the chart, write things down, and it can save you a lot of money if it comes down into your AOI and you're 100% ready to go. Again, you're wasting 5, 6, 7, 8 minutes. If the price continues on or doesn't come back to your area of interest the way you expect, you move on to the next trade. All right, so we identified the zone, confirmed the move is a motive wave, anticipated the pullback. We've got our trade plan set up. We're going to watch as the correction progresses. So we're going to set alarms. We're going to watch for the pattern that's playing out. We're going to look for the price action to see if it's coming in correctively. We're going to adjust our trade plan if the pattern is that is coming in is unexpected, or we think we have to make some changes or adjustments, we're going to adjust our trade plan based off what we think the pattern is. Or you have multiple plans depending on where the retrace or what pattern it is. Now we're going to wait for a reaction out of that area of interest if we want to take a more conservative path. And then finally, we're going to go ahead with the T and we're going to trade. So identify, motive, scout, examine, trade. I'm set. So this is the entry model that I've been using for quite a while. If anybody's interested, I'll put this Fib Retracement tool in here. Again, this is kind of a quick guide on to where, if you think something's going to come into potential Fib location, you can always look to see where those projected take profit locations are just based off of one tool instead of pulling, an APP tool. So this is one thing I'll put into the Discord. But that's all I got for today. I hope this helps everybody out there. If you have any questions, concerns, if I'm missing something, definitely let me know. Hit me up. Please like, subscribe if this is helpful. And thanks for watching. Trade safe, trade clarity. Take it easy.